Hello, this is Julia Higgs. This is the third lecture for Chapter 2, and in this lecture we're going to be talking about the regulatory environment. So now on slide 15, which has information on the various entities that affect the public accounting profession. I would argue that there are many more than what's on this list, but let's talk about what is here. First of all, for companies that are publicly traded, the Securities and Exchange Commission was given the authority by Congress to oversee both the accounting and auditing profession. The SEC has an office of the chief accountant, and through that office they have assigned the responsibility for setting accounting standards to the Financial Accounting Standards Board, and they've granted the authority to set auditing standards to the Public Company Accounting Oversight Board. In addition, the SEC has recognized that companies that are domiciled in a foreign country can file the financial statements using international accounting standards. So you see the International Auditing and Assurances Standards Board, and you see the International Accounting Standards Board. So these international groups work with their U.S. counterparts in establishing accounting and auditing standards. Also on that list is the AICPA, the American Institute of Certified Public Accountants. That organization is basically a club of CPAs, and it used to set all accounting and auditing standards, but over the years, possibly because of a lack of care in protecting investor interests, the AICPA has lost its ability to set those standards for public companies. The AICPA sets auditing standards for private companies, and the FASB now sets all accounting standards, whether it be for public or private. So we're going to continue to go over these relationships. It's depicted somewhat graphically in slide 16. So the auditing standards are created by both the PCAOB and the ASB, with influence by the International Auditing and Assurances Standards Board. So let me review something I've previously said, is that PCAOB was created under the Sarbanes-Oxley Act. And when it was created, they grandfathered in the audit standards that already existed at the time. So in 2003, the PCAOB takes what the Auditing Standards Board had done up until 2003 and said that's going to be our starting point for creating new auditing standards. So the ASB in 2003 continued to exist, but at that point they were only setting auditing standards for private companies. So I think sort of politically the ASB fell in its importance, so they began to work with the International Auditing and Assurances Standards Board, and the IAASB and the Auditing Standards Board worked very closely to redo the audit standards so that there is very close convergence between those two. Now the PCAOB is very political in its orientation, and it does not work as closely with the ASB and IASB. So we see now really the emergence of sort of two sets of standards, one for public companies and one for private companies. And that is going to make this class a little bit harder for you all because you have to understand whose rules you're following as you go along. And I'm going to take care to emphasize that, so by the time this course is over, you're going to have, I think, a pretty thorough understanding. Up until now, we've already seen an example of when the PCAOB and ASB differ, and that's with those management assertions. The PCAOB continues with the list they inherited in 2003, and that was the original list drafted by the ASB. But now the Auditing Standards Board, since 2003, has come up with a different set of assertions, and that's the 13 we talked about from Chapter 1. So if you're confused about this, don't be surprised. That wouldn't surprise me. So, but just try to remember, PCAOB sets audit standards for public companies, ASB for non-public companies. All right, so now you're back in 2003. One of the things the PCAOB inherited were 10 general accepted auditing standards. And these GAS continue to be adopted by the PCAOB. And one person who's pretty important in the audit world described GAS as the holy grail of auditing. And I think many of us old-timers think of it that way. GAS is a list of 10 standards that can be divided into, is divided into 3 categories. So we're going to talk about the general standards, fieldwork standards, and reporting standards. And these are things that are really, really important in auditing, and that's the reason they are listed as part of the 10 general accepted auditing standards. So let's first talk about the general standards. The first one is that the auditors to have adequate technical training and proficiency. And this is important in a variety of ways. This guides state boards of accountancy and how they set their standards on who can be a CPA. It guides universities in how they develop the curriculum, and it guides employers in the kind of training and oversight that they have to have of new employees. So this is an important thing that influences a lot of action in our profession. The second general standard deals with independence. Now, the audit product is not worth much if third parties can't rely on it. So if third parties don't believe we're independent, then they're not going to trust the audit report. So it's really important that we guard our independence. And so in this class, we'll talk about that for the better part of a week. So just keep in mind as we go through this, independence of your client is really important. And the last part of the general standards is exercising due professional care. And that is the care that a normal professional would exercise under the circumstances. If you see a CPA being disciplined for bad actions, it's usually failure to exercise due professional care and sometimes lack of independence. But these are really important ones that the professionals need to take note of. On the next slide, we have the standards of field work. Field work means you go into the field to the client's office and you're actually conducting the audit. So as part of that, we're told that we have to adequately plan the audit and supervise the workers. So if you'll recall, I said a lot of CPA firms work the same way, and it's because new staff has to be supervised, and almost every firm uses the same type of system to do that supervision and training. A second one is, in order to do an audit, you have to understand the internal controls of your client. And we'll spend another week talking about that. And you have to obtain sufficient appropriate evidence. The evidence is usually gathered by transaction cycles, such as revenue or inventory management. And we will talk about all of these as we go forward in the course. The last one is the standards of reporting. And keep in mind that these are auditing standards. So one of the reporting standards is that we are going to report whether the financial statements are in accordance with GAAP. So we're never going to report on non-GAAP financial statements, or if we do report on them, we say that they're not in conformity with GAAP. The report will discuss if there's a lack of consistency, and that could be a consistency in accounting principles. Again, we'll talk about these more extensively. You can assume with the disclosures box, what that means is that readers can assume that disclosures in the financial statement or audit report are adequate. And finally, we must issue an opinion. So you can't just sidestep the opinion portion. You have to issue an opinion on the financial statements. That last one there is a useful thing to know, because if you're ever looking for an audit report, you can do a search in your search function on your computer for the words "in our opinion." So if I'm ever looking for an audit report, I just search for those 3 words, "in our opinion," and you can find the audit report using that. So on slide 21, we have the PCAOB gas standards spelled out in detail. Now, interestingly, when the AICPA, Auditing Standards Board, worked with the International Auditing and Assurance Standards Board, they decided that they didn't want to use this gas anymore, and they had started to identify principles underlying an audit in lieu of the gas. So this is the second way that the PCAOB and ASB are differentiate themselves currently. So you can read these here. You have the purpose, and so I don't really want to read to you here, but the purpose here is to express an opinion on the financial statements prepared by management. Then our responsibilities have the competence and capability, comply with ethical requirements, maintain professional skepticism, and exercise professional judgment. It's interesting they put in the word professional skepticism. That's an important buzzword, so to speak, in auditing these days, and we will talk about that more as the course proceeds. You see, on performance, the objective is to obtain sufficient appropriate audit evidence supporting a reasonable assurance that the financial statements are free of material misstatement. So I don't know if you're noticing, but we're starting to use those words pretty consistently, and it's really important that you, as a member of this profession, understand that we give reasonable but not absolute assurance that the financial statements are free of material misstatement. And then finally, in reporting, we express an opinion based on the evaluation of audit evidence, or if we can't form an opinion, we state that one can't be given. All right, so we see on slide 23 the statements on auditing standards, and these can be considered interpretations of gas. So these are like detailed rules in addition to the 2 previous slides that we've just talked about. So the statements on auditing standards are what are issued by the Auditing Standards Board. And as it says here, the PCAOB adopted these in 2003, and they called those interim standards. And now the PCAOB issues additional standards on top of what was then called the interim standards, and they call those auditing standards. So if you're confused, I'm not surprised. Let me reiterate what this is. The PCAOB grandfathered in SAS 1 through 100, and then started with Auditing Standard 1 and is now on number 18. The ASB started back in the 1940s and now is in around 130 on its SASs. Okay, so auditing standards are issued by the PCAOB. Statements on auditing standards are issued by the Auditing Standards Board. Okay, so the SASs are classified by numbering systems, and I'm not going to say a lot about this. I was told at a meeting a couple of weeks ago that the PCAOB is about to reintroduce a new system, and it may even be up and running now. So that is coming out any day now. But they number the audit standards using these what are called AU numbers. So we will see these in action in class, and I will demonstrate this to you live when we meet the second week. And you can see on slide 25 how the statements on auditing standards are arranged. Now, there's a little more in this chapter on ethics, but we're going to be covering that next week or the week after that. So I'm going to leave the discussion on ethics for them.